So I just wanted to kind of introduce myself. I'm the founder of the Gosselin Group at Prominent Properties Sotheby's International Realty. And I run a small team of agents that help people buy, sell, and invest in real estate in northern New Jersey. And as a small business owner, I found myself totally overwhelmed by all the information and options being hurled at us by the news media. And so I decided to reach out to my accountant, David Tepp, who's on the line, for some clarity on all the, on the CARES Act. And this is where the idea of this webinar was born. So with COVID-19, we find ourselves in new territory each day, and businesses are having to make really difficult decisions, such as how do we pay our staff, our taxes, our vendors, our bills, and ourselves. And so I wanted to lead a discussion for fellow business owners through the nitty-gritty of some of the tools that are available from the federal government through the new CARES Act, and to help us kind of survive through this COVID pandemic. So we have two speakers joining us today. Ellen McHenry will be discussing the various SBA loan options currently available through the CARES Act. I wanted to give you a little bit of background information on Ellen. Ellen is the Senior Director of Financial Programs at UCEDC, focused in economic development. Prior to that, she worked in retail banking for 12 years. For those of you not familiar with the UCEDC, it is a private, nonprofit economic development corporation dedicated to boosting local economies and strengthening communities through loans, business development, training, and mentoring, and helping businesses obtain government contracts and providing accurate and relevant business information. Her role now is directing the development and administration of the SBA microloan, as well as the Community Advantage 7A and 504 loan programs. And she is responsible for a multi-million-dollar loan portfolio and the loan programs assisting businesses as a statewide lender in New Jersey. So Ellen, we're happy to have you. Our second speaker will be David Tepp. David will be sharing the latest tax, economic, and financial updates you need to make informed decisions. To tell you a little bit about David, David is my accountant and financial planner. David is the owner of Tepp Accounting and Financial Planning Services based in Westfield, New Jersey. He's a licensed CPA in New Jersey and New York, and is certified in personal financial planning. Mr. Tepp has decades of experience in helping families and small business owners maximize their cash flow. He is an expert strategist, investment manager, and financial planner. Mr. Tepp has a BS in economics from Penn State and an MBA from NYU, and he has experience working for world-renowned firms such as PricewaterhouseCoopers and RSM McGladrey. So with that, I'm going to turn it over to Ellen to start her presentation. Ellen, let me know. I'm going to pull up your slides. Can you see your slides?
Yes, I can.
Okay, great. So let me just maybe do, sorry, let me just make sure. Looks like the live on Facebook stopped and I'm not quite sure why. So we're just going to continue on and hope that we can record it and post it later. So apologies, I'm trying to get to the slideshow. Here we go. All right, so Ellen, just I'll let you take it from here and just let me know whenever to change to the next slide.
Okay, so yes, thank you very much, Carolyn and David, for inviting me to speak to the small business owners today. It is extraordinary times, and trying to get all this information out to you as quickly as possible and at least explain what the thought process is behind a lot of these different loan programs. We are a private nonprofit, and we have a myriad of different loan programs, but now there's new ones that are available to these small businesses, and this is what we want to speak about today. So if you can go to the next slide, Carolyn. So we, yes, thank you for inviting us. We have Carolyn, David, and UCEDC, and we can go to the next slide. This is one small program that UCEDC, as a microlender, a Community Advantage 7A lender, and a 504 loan lender. When the mandatory business closing started, we said, how can we assist small businesses? So we have microloan dollars, which we borrow from the SBA and relend. And so we said, how can we quickly get an infusion of cash out to small businesses? So we created our COVID-19 crisis relief program. It's 2% working capital. Actually, as of this week, it's probably going down to 0%. We're making $15,000 available to small businesses. While it might not seem like a lot of money, it could be one payroll cycle, it could be a couple of months rent. So from $10,000 to $15,000, it's going to be a credit scored program. If you have a credit score of 650 or above, you can have access to $10,000. Credit score of 680 gives you $15,000, and we're truly going to rely on the credit score. No fees, no collateral, just a personal guarantee and 1 year of tax returns and the interims for 19. So as soon as we launched that, we got swamped. And so we've approved 50 loans so far, and we have another 100 so in the queue, and we're waiting on some additional dollars to fund that. So if you were to go to our website, which is UCEDC.com, you'll see that we've suspended applications at this time, but we're hopeful to open up the web link for this loan later this week. So keep it in your mind about 15,000 working capital. And then I can talk to you about the other different SBA programs. So this is just one portion of loans that are available to New Jersey small businesses. And you can see from our website, as Carolyn indicated, UCEDC provides loans, training, and government contracting. So just a couple of minute commercial about UCEDC. If we provide loans to small businesses, we have a group of business mentors on staff. We have a former accountant. We have all former business owners. You have access to our small business mentors during the term of your loan. And that means that we still have some small business owners, David, close your ears, that don't use CPAs and take their receipts in a shoebox to a tax preparer once a year. So we try to get these particular business owners to get set up on QuickBooks. We help them with the chart of accounts, and we get them to understand what an income statement is or a balance sheet is, so that they could get a loan or grow and get conventional financing or go to the next level, and hopefully recommend that they use a CPA going forward. That it's one of the best things that they need to do. And for those of you who are on the line who are Union County businesses, we're a little unique in that we're considered a procurement technical assistance center. And what that means is we have a contract with the Department of Labor and the Department of Defense to help small businesses get government contracts to sell their product or their service to federal entities, federal, state, and local entities. So we look at the NAICS codes, or keywords and profiles of the RFQs and the RFPs that are out there. And if they match your small business product or service, we help you get a government contract. We help you with pre-bid work and post-bid work. And when I say government contracts, it's not just to sell nuts and bolts to the government. Government buys a lot of product. Colavita Pasta is one of our clients. They sell their products to the school systems and the PXs. So it's another resource for you as a small business owner when things turn around and the mandatory business closure is over. If you're a Union County business, check out our government contract to see if we can help you have another income stream or sell your product and services. Next slide, Carolyn. Okay, so these are just websites that you should consider when you're looking for resources for small businesses. When I'm going to talk about the SBA loans, we'll click on that, but you have the SBA.gov, and there are numerous resource partners that are SBA partners, the SBDC, njsbdc.com. And what they are they are small business consultants that are usually housed in colleges and universities. There's one over at Kane University, you have at Rutgers, and they will work with you for anything you might ask. Hey, I'm looking to start my business, and they might help you with a business plan. I'm looking for marketing assistance. They might put you in a webinar or put you in touch with a consultant. Hey, I don't know if I should be a limited liability company or a sole proprietor. They'll put you with an attorney for that assistance. But really the reason why I'm highlighting them right now is with all the loan programs that are being offered by the SBA, the Small Business Development Centers, and this is why you need to click on that and find the one nearest you, will assist in the different loan programs in completing the apps and answering your questions. Then you have SCORE, another SBA resource partner. The state of New Jersey, just briefly, the New Jersey library systems, they're very good. There are a lot of resources to you. We're going to speak about the NJEDA, New Jersey Economic Development Authority loan programs. And then you have our website, Dave Tepp's and Carolyn's and Union County and Essex County. And if you may go to the next slide, please, Carolyn. So this is just to tell you briefly about the loan programs that UCEDC has. When we're in a different environment, we are an SBA microlender, which means we borrow money from the SBA and turn around and relend it. These are smaller loan dollars from $5,000 to $50,000. Seed capital for an established business trying to get to the next level, or seed capital or working capital for a pure startup that may not be able to get financing from conventional banks. Typically, no matter what type of environment it is, banks don't lend to businesses under 2 years of age or 2 full years of tax returns. So they may not have access to conventional financing, or maybe it's just a smaller dollar amount, or maybe they don't have enough skin in the game. Microloan program will allow you to put 10% down, whereas a lot of times when you're looking for conventional financing from a bank, they want 20 or 30% down. Microloan, our average microloan is $15,000, $20,000. We have our share of landscapers, hair salons, delis, some home-based businesses. So that's a small program, but it helps a lot of people at different levels of the life cycle for the business. Community Advantage 7A program, it is a SBA guaranteed loan program. And what I mean by guaranteed program is you are borrowing from a lender or you're borrowing from UCEDC, and SBA gives us as a lender a loan guarantee so that it would guarantee the loan we make to you, the borrower. So you come to us, you look for funds. Maybe you don't have the collateral coverage we're looking for, but if I have a loan guarantee, as a lender, I'm more inclined to do that deal because I know I have SBA. So still means you have to provide a personal guarantee. You still have to pledge all available collateral. There still has to be cash flow, but maybe you're just at break even and you're going to buy a piece of equipment, and the amount of widgets you're going to make is going to show the cash flow to repay the loan. So if I have that SBA guarantee, it's an inducement to do the deal. So the Community Advantage goes from like the microloan level of $50,000 up to $250,000, and it's 2 different tiers. Up to $150,000, SBA provides us an 85% guarantee. And from $151,000 to $250,000, SBA gives us a 75% guarantee. So how that works is, let's look at a $100,000 example. You're looking for $100,000, SBA provides UCEDC an 85% guarantee, or $85,000. We're only unsecured $15,000, which is kind of in the wheelhouse of the microloan program anyway. You pay a one-time fee to the SBA of 2% of the $85,000, a one-time fee to the SBA to provide the guarantee to us. Now, we're still going to ask for your personal guarantee. We still want your business to succeed, but if things, things go south, then we would use that guarantee to repay the loan for us. The Community Advantage is a good loan program, as I said, because it goes up to $250,000, And the reason why it's a nice little loan program is you may need more money than the microloan program, but maybe you don't need the millions of dollars that banks have under their 7A. Banks are 7A lenders, and they go from, they say, the $50,000 to $5 million. And so the Community Advantage program, we're seeing businesses that need working capital, or maybe they need to refinance online loans. Before this crisis happened, we had a lot of people who were trying to, make either monthly payroll or, every 2-week payroll. And so they'd go online and they'd see the On Deck or the Cabbage, and they'd get approved for a loan and they'd get their money in a couple of days. But what the online loans don't tell that business owner is that they're going to take the money out of their account on a daily basis or once a week. And it's not going to be like a typical car loan where you get the loan and within a month you start making payments. My loan payments are once a month. You have money taken out of your account on a daily basis. The interest rate is just enormous. Typically usury rates are 30%. Well, these are north of 40%, and they get away from having a higher interest rate in that it's not a loan, it's a merchant cash advance. So just having that different name of the title allows them to charge a higher rate. So while you might have gone online and gotten one of those online loans and it helped you for that time period, now making those daily payments or weekly payments is crunching your cash flow. So we've used the Community Advantage loan to repay a lot of those loans. We've had businesses come to us. They were 17 months in business, temporary servicing agency. She had a lot of accounts, but she needed to make payroll and she needed a line of credit. All of our loans are term loans. We're not a depository institution, so we don't provide lines of credit. But the bank said to her, you need 2 full years of tax returns. You need 24 months in business. And so we provided $150,000. She had like 26, 27 months under her belt. Boom, the banks came to her and refinanced us out. But so we were able to provide financing to get that business to the next level and to get them conventional. And then the 504 program, it's an SBA program that to me is probably one of the best kept secrets for commercial real estate. So Carolyn, I don't know if you're residential or commercial, but this is a owner occupied 10% down commercial real estate loan. You just don't see 10% on commercial real estate. You see that on residential. You see, 3 or 5% down with first-time home buyers. You see 10% down with private mortgage insurance, and normally it's 20% down. Here's commercial, where it's 10% down. You have a small business owner that's been occupying a building for a while and now they want to buy it and they go to the bank and the bank says, do you have 20%? Do you have 30% to put down? That's a lot of money. So the 504 program is a participation with another lender. So it's an SBA program that we partner with a bank. And just to give you an idea, the bank does 50% of the project or the purchase price of the building. And this is a program which will allow you to put improvements or rehabilitation into the loan amount, not just the acquisition. So the bank will do 50%. Let's go on $1 million example, 50% or $500,000 and take a first mortgage. We come in with the SBA and do a second mortgage and do up to 40% of the purchase price. And then the borrower puts 10% down, 50, 40, 10, 504. So not only is it 10% down, but it's 25-year money. It's a 25-25. You don't see that in commercial real estate. Typically you see 15 or 20. So now you can go out 25 years. So it's not a question that the borrower only has 10% down. Maybe they want to leave their other 10% or 20% for operational expenses. They want to have that cash available, or they just don't want to put 30% of their cash into the building. So 10% down. For the 40% piece, again, it's a second loan behind the bank, is fixed 25-year money. And it's sold in the form of a debenture. So the interest rates are in the low 3s right now. So the prime rate is what, 3.25. So it's a little bit close to prime. You just don't see that in commercial real estate. The bank has to match the 25-year amortization, but they can have interest rate resets at 5 and 10 years. So the bank does 50%. SBA does 40. You have a fixed rate, 25 years on that 40% piece, and the borrower puts 10% down. Owner occupied, 51%. Now can be mixed use, but the occupying business, which is the borrower to us, has to occupy at least 51%. So I'll say to you, Carolyn, you can't go out and buy a building and put your little office in 10% of the space and rent out the rest of it. If you have an office, you have to occupy at least 51%. Okay, so that's our loan programs. Let's get into the COVID loans. So if you want to go to the next slide. Okay, go back, you missed one. Okay, so if you want to click on that SBA link in the right below, yeah, right there. I think it will allow you to click and bring you to the SBA website.
Yes, can you see that right now?
So scroll down a little bit. Scroll down a little more. You're going to have 4 icons. So let's come up a little bit more. Let me see the icon. Oh, yes, right there. So let's look right to left instead of left to right. So these are 4 programs, and what the SBA debt relief means is if you as a small business owner or even an individual, if you have any type of SBA loan program, as in another bank 7A or a disaster loan program, I live in Cranford, the Venice of New Jersey, have a disaster loan because I got killed in Hurricane Irene. I have a disaster loan. SBA is saying if you have any SBA loan, they will cover 6 months payments starting now, probably through October. So part of their debt relief is that if you have a program, they're going to cover the payments or they're going to make the payments for the next 6 months. And if you get any of these SBA loan programs, they will cover the payments once you're approved, so that if you get approved for a disaster loan for the part of the COVID, you get approved for a dollar amount, you don't have to start making payments in 30 days. They're going to cover the next 6 months. So that's part of what they call their debt relief. SBA Express Bridge Loan. So for anybody who's on the call here and has a lending relationship with a bank that's an SBA lender, you could go to that bank and get an SBA Express Bridge Loan program, Express Bridge Loan for $25,000. So what SBA is saying is that you're going to apply, and we're going to talk about the EIDL, the one to the left of it, Economic Injury Disaster Loan. And while you're in the midst of applying for the economic disaster loan, you have access to this bridge loan, which SBA is telling the lenders to respond in 2 weeks to give you access to $25,000. So that while you're waiting for the process to go through on the SBA disaster loan, you're going to get $25,000. And then after you get approved and funded, it pays off this bridge loan. So it's some cash, it's a bridge to waiting for the funding to happen for the SBA injury disaster loan. And in addition, while you go on the SBA site and do SBA.gov, and anybody who's on the call, if you do SBA.gov, just like what Carolyn did, you click on it, it brings you to this screen, and then you can click on any of these icons. You can get $10,000 in advance, which is a grant. You don't see grants too much in this day and age. You can get a grant that you can use right away. Hopefully you have gotten an express bridge loan from your bank lender. The EIDL loan is directly through the SBA. You are applying through the Small Business Administration and getting $10,000 immediately while SBA processes your economic injury disaster loan, and you're going to your bank who's an SBA lender or an SBA lender to apply for the express loan. So you could have access to $10,000 from the SBA, and you could have access to $25,000 from a bank. Okay. And what it doesn't have, it's kind of confusing, even though it says the idle loan advance, when you click on that, it's going to bring you to the link to apply for the economic injury disaster loan, which is dollars that you could borrow up to $2 million at 3.75%. Now, this is a time when you are applying directly to the SBA. You are not applying to any bank. You're not applying to me. You're not applying to your bank. You are going directly to the SBA. You're applying online. SBA will determine your eligibility, and the interest rate will be 3.75. The loan will be payable over 30 years. And in this program for the economic disaster injury, they're going to defer the payments for 1 year. So deferment and covering of payments are two different things. It's one thing for them to pay the first 6 months. It's another thing for deferment. So for 6 months, they'll make the payments. And then for 6 months thereafter, you won't have to make payments, but the interest will accrue, and you'll have to make up that interest in the principal payment. But at least you have the relief of not making payments for a year. What SBA says, and it's like a lot of their programs, if you own it, you have to pledge it. So in this instance, on the economic injury disaster loan, if you have personal assets or business assets, and I'm talking real estate, if you own it, you have to pledge it. Now, for some reason, it's fully encumbered and it's not available, that's fine. If you're not a homeowner, if you're a renter, that's fine as well. But if you do have equity in your home or commercial real estate, you have to pledge it. Anything over $25,000, SBA will ask for collateral. So you could get approved for $100,000. SBA will say you can have $25,000 here today. You already got your $10,000 advance. But if you want to move forward with this loan, you have to give us collateral over 25. You could say, I'll just take the 25, but I just want to let you know. And on this loan, they've had this out now for a couple of weeks. It's been incredible, the amount of applications SBA has received. They say that they will approve in 3 to 4 business days, but it'll take approximately 30 plus days to fund this loan. So that's why it's important for you to check out the Express Bridge loan and to take advantage of the advance, because SBA still has to go through their process of approving you for that economic injury disaster loan. You can, when you fill out that application, you can tell the SBA, hey, listen, I need to cover payroll, or I need to cover my rent, I need to cover utilities, I need to cover the interest on some commercial mortgages or the interest on some business loans. Those are eligible purposes. And I already told you the interest rate. So this is a loan that, again, you can go up to $2 million. Check it out and then see how much you think that SBA will approve you for, and then submit the application. But I would recommend that you get in the queue as soon as possible. The next loan, which is the one that we're hearing a lot about, is the Paycheck Protection Program, PPP. Now, the premise of this loan was a really good premise, but it's a new product. And so while it was wonderful to say, if you maintain your employees or if you furlough them and you're going to quickly rehire them, SBA will cover the payroll for you. And then after a 6-month period, the loan will be forgiven. You don't see too many forgivable loans, and you don't see dollars that would cover payroll. Usually it's for hard assets, purchasing equipment, purchasing real estate. The problem with this is that the SBA nationwide did $20 billion in loan last year with all their lenders. Now the Treasury is saying to the SBA world and to all these lenders, you got to put $350 million out, or $350 billion out in a couple of weeks. And you're going to do it with the lender is getting 100% guarantee, but the guidelines that SBA is telling the lenders is that the borrower doesn't have to provide a personal guarantee. You don't see too many loans nowadays with no personal guarantees. For those of you who have seen banking over the years, and David, you're not as old as me, but you've seen no doc, low doc, no guarantees, but then you see the the economy, the problems we had in 2008 as an organization, we always ask for a personal guarantee, and most banks do too. So for SBA to say no personal guarantee and no minimum credit score, it's just unheard of. And so the banks are being told to lend these dollars to do a quick turnaround time and not to have credit scores or personal guarantee. And they don't have the processes in place for this particular loan. So you're applying, this is a loan that while it's an SBA loan, you have to apply with a bank, with a financial institution. Now, what SBA did was you have your SBA lenders, but there are a number of banks who have never participated in the SBA program before. SBA has allowed these lenders or these financial institutions to lend under the PPP program, the Paycheck Protection Program, for the first time. So if you have some of the smaller banks in town, this Venture Savings, they're applying to become an SBA lender for this program, or just smaller banks that I've never seen before. So the bank is going to have 100% guarantee. You can borrow up to, now this is based on your payroll. So you have to, and click on the link, download the application. There's a calculation where you're going to be allowed to borrow up to 250% of your average monthly payroll for the last year. And that is your gross payroll. So it includes all of, before you start paying out for FICA and Social Security, and it includes health benefits. So once you do that calculation, there's a number that you would be given that tells you how much you can borrow. It's going to be 1% interest. Again, the first 6 months will be deferred. And while SBA is asking the lenders to use this program or to give you access to this program, they're telling the lenders that they have to give you an approval in 10 days. So right now, for those of you who have gone on the system and were applying with your particular banks, the only reason why you got messages like we're not doing it right now or we're still working on it is they're still trying to wrap their head around the different ramifications, because they have to check your payroll in order to approve you for the loan. And then this is a 2-year loan. Based on the next 2 years, they have to come back to you and ask you, are those employees still around? And so the banks were kind of concerned that there would be too much paperwork on the 2 years later and that SBA wouldn't honor the guarantee. So, while this might not help you decide who to go to borrow, I'm just giving you the reasons why it's taken so long to roll out. There was many more, guidelines or conditions that the banks had to agree to before they could handle it. And again, there's like, what are there, 300 million small businesses in the United States. So a lot of banks said, SBA says I am a PPP lender, but I still have to do what's best for my organization. So some banks have said, you have to have a relationship with us. Some banks have said, not only do you have to have a banking relationship, a checking account with us, we want you to have a lending relationship with you. Other banks have gone even further. We want you to have a deposit relationship. We want you to have a lending relationship. We want you to do online banking with you. So, you had all these small businesses that say, hey, I've been operating my business for 30 years. I've had a deposit relationship with this bank. I'm debt averse. I don't have a lending relationship. So they were automatically thrown out. So I think while the program rolled out last Friday, the banks are understanding it more, putting the process in place to be able to accept these applications, review them, and on a timely manner approve them. So one, if your bank has told you you don't have the lending relationship they want, and I'm talking about Bank of America there, then you need to try and go to another lender or another bank. There are some banks out there who are saying you don't have to have a relationship with us, but if we approve this loan, we'd like you to open a depository account with us, which is not unheard of. You saw that in the better market. So the Paycheck Protection Program, you're going to fill out the form, and there's usually a payment calculator or a loan calculator that'll tell you the dollar amount. SBA has asked the banks to approve it within 10 days and help you get the funding. And then, as I said, you have a deferment on that part. And the beauty of it is once you get those dollars, you don't have to just use the dollars for your payroll, because remember, they gave you 250% of your payroll over a 1-year period. You could use the dollars that SBA approves or the bank approves and pay rent, pay utilities, pay interest on any business loans you may have. So while the calculation to determine the loan was based on payroll, you can use the funds for other business purposes. Then after we get through, say, a year cycle, the bank will come to you, the SBA will come back to you and say, listen, your business is up and running. Do you want this loan to be forgiven? And they're going to forgive the portion of the dollars that went to payroll. And then it's typically, they're saying that no more than 75% of the dollars should go to payroll, so that 25% can go for other uses. So the other uses, that 25% will be amortized up to 10 years. So if all the dollars went for payroll, loans forgiven, you're good to go. And hopefully we're in a better place this time next year. So I know that's a lot of information about the Paycheck Protection Program. So what I would say is check back with your banks. If not, I can provide you, you'll see my email address on the, and we'll talk about, we talked about my loan program, we'll talk about the EDA. You can email me and I can tell you some banks that I've heard are doing the loans without having a deposit relationship. But if you want to go back, Carolyn, to the EDA, I don't know how many people heard about the EDA grant program that they have that came out last Friday at 9 o'clock. And what's interesting about the EDA, New Jersey Economic Development Authority, they're considered the state bank. They do bonding, they do a lot of different programs, but they came out with a program, and on their website they have a little block that's called an eligibility wizard. So it's a really, really cool thing. Just click on that, fill in the blanks, and then it can tell you the different loan programs that you have, whether or not you're eligible. The grant program will provide funds to for-profit and not-for-profits, but you have to be a 501c3. You can't be a 501c7. And I think, David, you can pipe in, I think 501c7s are like chambers or membership organizations and are not charitable organizations such as UCEDC. But anyway, EDA provided a grant program to cover payroll for employees. This was a smaller program than the Paycheck Protection Program, in that businesses that had up to 500 employees could apply for the Paycheck Protection Program. But for the EDA, it had to be businesses that employed 10 or less, and they were making available $1,000 in increments from $1,000 to $5,000 based on your full-time equivalents. Unfortunately, that program went online on Friday morning. They had $10 million available in form of grants. They got 16,000 applications and they were oversubscribed. Now the EDA is going back to the state to ask if in fact they can have access to some other dollars. But in addition to that grant program, which is part of for the payroll, EDA has their own emergency assistance program. And this one, and you need to go on the EDA website, the application is available to download right now. It's available to download, fill it out, but the online window to apply, to download, to upload or download, whatever you say, to apply is next Friday, April 13th at 9 a.m. And that window closes on Monday. I'm sorry, it's Monday, April 13th, excuse me, right? Monday is April 13th?
Yes, it is.
Okay, thank you. So it's Monday 13th at 9 a.m. and the window will close Monday, April 20th at 9 a.m. It's not going to get to Monday, April 20th. Again, it's going to be first come, first serve. You can borrow up to $100,000. It's for businesses up to $5 million in revenues. It'll be a 10-year loan repayment. It'll be 0% from years 1 through 5, 0% interest. And then it'll be 1 to 3% interest from years 6 through 10. This one, no home-based businesses can apply, but also too, similar to the other programs, no payments for the first year. This one, incredibly, has a minimum credit score of 600. That's very low in the lending environment, no matter when the lending environment is, so that's pretty good. And you have to be at least 1 year in business, so you can borrow up to $100,000. And I would get your application ready and go online to the EDA and get that in Monday on April 13th. One other one that I found out about after we created these slides, there's another organization, if you guys want to write it down, it's njcc.com, njcc.com. They are New Jersey, or I hope they're not .org, New Jersey Community Capital, NJCC. They have what they call their Garden State Relief Fund. And they are a not-for-profit as well. They're down in the Mercer County area, but they are a New Jersey lender. They do a lot of housing assistance, but they also help small businesses. They will lend anywhere between $10,000 and $75,000 to businesses that have up to 50 full-time employees. Their loan terms will be 3% interest, 36 months payment, and the dollars can go towards inventory, rent, mortgage payments, salaries, insurance and utilities. And they have said that they are looking to process loans within 10 to 14 business days. So New Jersey Community Capital. So those are the loan programs that I'm aware of. And I don't know if you want me to take questions now, Carolyn, or we'll let David talk and then we can open it up to questions.
Thank you so much, Ellen. That was wonderful. I think what we will do is just go straight into David's presentation and then hold all the questions to the end.
Okay.
There should be an area called Q&A where participants can go in there and write their questions, and then I can go through them at the end.
Okay.
Myself. So David, why don't you take it away?
Good morning, everybody. First, can you hear me okay?
Yes.
Excellent. Second, there we go. I was looking to share my screen. How are you doing?
Very good.
We're not sure. No, you can't see my slides as of yet. Hang on.
I can see them. Well, I see the opening slide.
You can see the slides? Oh, okay.
Yep.
All right, wonderful. Good morning, everybody. First, just a quick thing. Ellen, did you mention the Facebook loans and grants?
I wasn't aware of them, David.
So Facebook, I don't know what information is presently available, but particularly for those small businesses who do a lot of social media posting and on Facebook in particular, Facebook is offering loans for small businesses. They've been talking about it. They've actually been somewhat surprisingly slow to release information, but they are offering loans and advertising credits to those who do a lot of advertising on Facebook. So just something to look into and keep an eye on if you are a small business looking for that kind of help. So a number of things before I dive in. Number one, I have worked with the UCEDC for years. Ellen McHenry, Mark Lightling, Eric Peter, and Adam Farah. These are tremendous professionals. I strongly advise if you own a small business, you're looking to grow, you're looking for the proper loans, these are the people you're going to want to speak with. I've been working with them for years. I've heard nothing but absolutely fantastic feedback from my clients. I highly recommend all of them. They're terrific. Carolyn, I really want to thank you very much for organizing this. I've worked personally with Carolyn. You'll be hard pressed to find anybody who hustles more, is more energetic, more diligent. She's just a wonderful real estate professional. And if you are looking to purchase, sell, or just gather information, she is a fantastic resource, and I highly recommend you connect with it.
Thank you, David.
Of course. Before I dive in, I'm a tax financial expert. and we're going to be discussing a lot of numbers and talking about economics, but before I even dive into all that, I think it's really important to emphasize the human toll, and that I in particular am not numb to this at all. Over 1 million have been infected. Hundreds of thousands will die. It's horrific. Many people are properly isolating. They're following the rules, and that's fantastic. And that's what's going to enable us to really get past this quickly. But this is just a horrible event. And it's forced governments to make just a dreadful choice. And that choice is simply to compel their citizens to isolate themselves and sacrifice the economy or risk their lives. And that's really no choice at all. And governments most governments, I should say, have moved forward with the idea that if we isolate, we can minimize the impact of the virus, but we'll just simply deal with the economic impact later. There are nations in the world that don't have the ability to spend trillions of dollars. So just as something to keep an eye on, I specifically read nations like Mexico and Brazil. They don't have the financial resources to do what we're doing. Therefore, they have been slow. In fact, some governments are actually against this isolating concept. And unfortunately, you could see some terrible outbreaks there. I really hope I'm wrong. I really hope they change their minds. But unfortunately, this is the world we live in, and this is what you can see. The CARES Act is one component of the government's response to what constitutes the largest economic crisis since the Great Depression. The goal here, from what I gather, is quite simple: to put money in your pocket and to put you in a position that when this virus subsides, that you can get back out, spend your money, and enjoy yourself just as you had prior to all of this. And their hope, they being the government, their hope is that we're going to have a very quick recovery. Many economists are referring to what's called a U-shaped, the letter U-shaped recovery. Sharp drop at the bottom in the trough for a little bit, and then a very, very quick and sharp recovery. I think that may be somewhat wishful thinking, and we'll dive into that in a minute, or in a few moments, but that is the purpose of this legislation. So we're going to go through a number of different things, and you're going to see how the government has found a variety of different ways. I'm actually rather impressed, being someone who's ordinarily somewhat skeptical of government activity. I'm actually rather impressed with some of the ideas that have been put forth here in this legislation. A lot of different opportunities here for folks on this call and many others to take advantage. One last item, there's many different loan and grant opportunities that are out there. Now, grants are wonderful, and in some cases these are tax-free grants, in which case if you are in need and if you are eligible, go get your free money. There's absolutely no reason not to. If you're going to put it to good use for its intended use, then by all means pursue it. But for those small businesses that are truly struggling, and for which this presents an existential threat, you may want to ask a few questions before you go out and borrow. You may be facing a position where you're going to borrow money to pay off some employees, to pay off your landlord, and to pay off other expenses, when realistically restored revenue you once had, may not come so quickly or at all. And you need to have an honest conversation, honestly, with yourself, with your business advisors, with your partners, with your CPA, and just make sure before you dive into, some of these loans are 6 figures, and it's great, it's a lot of money, it's inexpensive, it's accessible, it's terrific. But you just have to make sure that you're going to have the revenue over a long term, because you don't want to put yourself at risk. I understand there's no personal guarantee, but you don't want to necessarily put yourself at risk unnecessarily just to pay off others. So just make sure you're having a good, honest conversation with those around you. With that, diving right in. Here we go. So the IRS has very generously extended the deadlines. Many of you are already aware of this. This does not require a separate extension. You just simply already have the ability, instead of filing April 15th, you can just file as of July 15th. In addition to which, the IRS has extended the first and second quarter tax estimate payments to July 15th. So you don't have to make a 2020 tax estimate as of April 15th. However, if you do project having a taxable income for this year, you may want to make sure you put that money away and not accidentally spend it, so that by the time mid-year comes around, you have nothing to contribute. Make sure if you have that income, set it aside, and you have it available so when it's time to make that payment, you have the cash. Note that each state has its own deadline. As a perfect example, Virginia, I believe, has a filing and payment deadline of June 1st, not July 15th. New Jersey just late last week, as a matter of fact, passed a law extending their filing and payment deadline for individuals to July 15th. However, they have not yet technically extended the 2020 estimates. We do expect that to be passed on Monday, but it has not yet happened. All the following I'm about to go through are for tax year 2020. And there's just a handful of items here that I see as particularly important. Retirement plan RMDs, that's required minimum distributions, they have been temporarily waived. So you don't have to take them if you don't want them. Why? Because the government doesn't want to compel you to sell investments at a loss in your IRA just to take an RMD that you may or may not need. Now, some folks need the RMD, and if they need to, they'll take it. All they're doing is waiving it so that you don't have to take it. This pains me to put on the screen. One of the worst things you can do, in my opinion, as a financial planner, is to take an early withdrawal from your retirement plan. And not merely because of the 10% penalty that almost always applies, but because money compounds in such a way that it creates your retirement for you. On the average, you can double your investment money in about 10 years, okay, depending on how you invest. If you're 40 years old and you have $200,000 set aside for retirement, by the time you're 50, that could be $400,000. By the time you're 60, that can be $800,000. And by the time you're 70, you get the idea, okay? You're going to be worth you have 1.6 million set aside. If you take it out just to pay a bill today, you're sacrificing those future gains and potentially your retirement. So penalties have been withdrawn for 2020. You have the ability to withdraw from your IRA if you need to. You can also borrow off your 401k. They've increased the allowable balances for that. I highly encourage you to avoid that temptation. And as a little bit of help from the government, even if you take the standard deduction on your 2020 tax return, you can still take $300 in charitable donations. Just has to be in cash. You can't drop property off at Green Drop and take $300. It's got to be in cash. Again, this is from the government objective to put money in your pocket. So on top of state paid unemployment compensation, the federal government's going to give you an additional $600 per week. What is really great is that this is going to extend to those workers not normally eligible. Now, ordinarily, unemployment is only available to those who are employed and are receiving a W-2 paycheck. They're now extending certain benefits to independent contractors. So if you're working out of your house and you're getting, you file a Schedule C with your tax return every single year, and suddenly work has dried up because of what's taking place, you may be eligible for these benefits. And there, of course, the government is extending the amount of time for which you can receive these benefits. Now, stopping here for a moment, this is really historic. This is an unusual set of circumstances where the government is giving away free money to small business owners to keep their staff. And at the same time, they're giving extra money to workers if they're laid off. So this is the first crisis in American history where employers can't wait to keep their people on staff and employees can't wait to be let go, depending on, of course, their income. I've actually had small business owners approach me with legit concerns saying some of their employees may not want to come back, that they'll make basically the same amount on unemployment. So if they're let go over the next month or two, they're very content. They don't want to be brought back on, or they don't want to be retained at all. They'd rather go on unemployment. If you're encountering that problem, if you don't let your people go, I think they're going to have a tougher time being eligible for that unemployment. So you may want to figure out how to have that conversation with the employee. But this is very, very unusual because the government is rewarding both the employer for keeping people on staff and the employee in the event that they're let go. Recovery rebates, once more, essentially free money. $1,200 per person plus $500 per qualifying child. And what this is going to be a tax credit that's issued in 2020. They're just simply issuing it to you in advance. There is a phase out. If you are single, phase out begins at $75,000. If you are married, it begins at $150,000. MFJ stands for married filing jointly. So many folks will receive this, and that'll be helpful to them. It'll give them a little bit of extra cash in the event that they need. And the income to determine what kind of rebate you will receive will be based on whatever your most recent filed tax return is, 2019 or 2018. Lots of small business benefits. I'm giving you the highlights here, folks. Some of these are very complicated and involved. Happy to answer any questions, but most likely if you're asking about yourself in particular, I'd encourage you to, let's take those offline. But there's a lot of Easter eggs, if you will, here for small businesses. One is a refundable tax credit. If one of your employees is infected with COVID-19 and has to take leave for illness, you can keep them on pay. You're actually encouraged, I believe you're compelled to keep them on pay and on payroll, but you get a tax credit for the Social Security taxes paid. For family leave, if someone in their family is sick and they take leave, you can, I believe you actually may be able to get Social Security and Medicare as a credit, and there's other benefits as well. Deferral of federal payroll taxes. You have the ability to, I believe it's effective April 1st, to not pay FICA, which is Social Security and Medicare taxes for the remainder of the year. But you will pay half of that back at the end of 2021 and the other at 2022. However, anybody who receives either a grant or loan for the Payroll Protection Program will not be eligible to defer their federal payroll taxes. So if you do not get or do not apply for that grant or loan, this is an option that you have just to kick the can down the road a little bit and worry about paying that expense later on. Once again, if you do not apply for the PPP, there is a retention tax credit where certain revenue and wage limitations will apply. But the idea behind this being is if you don't want to go for if you don't want to apply for the loan, you don't want to apply for the grant, there are other tax benefits for you. This probably won't affect too many people on this call, but the government did increase the cap for the deductibility of interest expense. And then qualified improvement property is now amortizable over 15 years. Previously, it had been 39 years. This is arguably the most important and probably the most confusing topic on taxes. The government, in an effort, again, to put money in your pocket, is enabling you to use losses and apply them to prior years so that you can get a refund on the tax you've already paid. So if you have a loss in 2018, 2019, you can take that loss, and then any unused loss can be carried back to a previous tax year that would require an amended return, and you can get a refund. So if you pay, if let's say you owe no tax this year because you have you have a big loss, but in a prior year you paid $50,000 for the taxes because you had a big gain, you can take the unused loss for this year, go back and apply it, and get a refund. This is potentially huge, but with a few caveats. Okay, so again, it can enable you to receive cash refunds, but we have to amend prior year returns. And sometimes this is complicated, so there will be fees involved. So if we're talking about a $10,000 difference in tax gain, it might not be worth it to you. If we're talking about 30 or 50,000, maybe something we want to look into. Definitely consult with your CPA on this topic. Particularly if you have a large swing, as I'm using as an example, where you have a large income in one year and a large loss in the subsequent year. The government's response has been swift it has been overwhelming. And just to give you some news from this morning alone, phase 3 of the stimulus, which is called the CARES Act, was approximately a $2.2 trillion program. The Federal Reserve this morning just unveiled details of $2.3 trillion, an additional program to help larger businesses and states as well, which I think particularly the assistance is going to be required for those states, particularly those states who are teetering on bankruptcy, and that would include New York, New Jersey, California, Illinois. So as we're talking, our government is devoting trillions of dollars more to try to support the economy. And they're going to need to, because the other piece of news this morning is that economists were expecting 5 million new unemployment claims this past week. There are actually 6.6 million, which brings us close to 17 million unemployment claims in the past 3 weeks. And I'm sorry to say we're nowhere near the peak. You will continue to see those unemployment claims, I suspect, over at least the next month or two. To quickly review what has taken place, monetary policy, which is derived directly from the Federal Reserve or the Fed, they have reduced interest rates to near zero. Now, what interest rate are we referring to? It's the federal funds rate, which is the rate at which banks lend to one another. Bottom line is we want banks to feel liquid so that they are comfortable lending. And if they can borrow from other banks to fill a short-term need with virtually no rate of interest, that enables them, it gives them more impetus to lend, makes them feel more comfortable about lending. This got absolutely no news. And it's very unusual. We'll put it that way. Bank reserves are now zero. In almost every economic type and period, banks are required to keep 10% of your deposits at all times. That has now been reduced to zero. And that is a very clear indication that the Fed is extremely worried about bank liquidity. Because if the banks don't feel liquid, they will not lend. And you know what happens if they don't lend. So they have reduced bank reserves to zero, which is just absolutely extraordinary. And bond purchases, which is the third thing that the Fed can do, really is adjust the money supply. And the more money in an economy, the more you are stimulating that economy. So the Fed has agreed to purchase pretty much any bond that's out there, which means they're going to flood the economy with money. This is often referred to as quantitative easing. Put simply, they're printing money and putting it into the system. We will talk about the effect that will have on inflation in just a few minutes. Fiscal policy, which comes directly from Congress and the White House, they have various phases of legislation. Most recent is the CARES Act, but I think we are discussing more. We were talking about small business loans earlier, and I can tell you that those small business, the dollars allocated for those small business loans are being gobbled up very, very quickly. There is discussion of an additional $250 billion allocated to more small business loans. Look for that, I would say. They're going to try to schedule a vote on that today. I don't think it's going to go through, but maybe it will. If not today, then in the not so distant future. We're going to increase spending. You've seen that. We just mentioned over a $2 trillion program, and we're not done. I think we're going to see more, including all the tax breaks that we've already mentioned. We know where that's going to go, right? We're spending tons and we're pulling in less because we're lowering taxes. So you know where that's going to bring us. Current economic conditions, you're seeing historically low interest rates. The federal funds rate has not been this low since 2009, and before that, 1958. It was the last time you saw interest rates, federal funds rate between 0 and 0.25%. We have a very slightly positive yield curve. What does that mean? That means a positive yield curve means that the longer period of time you borrow, the higher the interest rate will be, which kind of makes sense, right? If somebody wants to borrow money for a week, you can give them a low interest rate. If they want to borrow for 10 years, you're going to give them a higher interest rate. But to give you a sense of how flat the curve is, the 1-year Treasury bill interest rate is 0.23%. The 30-year Treasury bond is 1.37%. That's the difference between a 1-year and a 30-year bond. 1.14%. That's phenomenal. That's just unreal. And it's a little disconcerting. For the moment, inflation is low. We're at 2.3%. Historical average is around 3%, maybe a little less, and the average for the past 10 years, as you can see, is closer to 2%. I don't know how long this will last, folks. I really don't. As long as the economy, or the global economy, is struggling this much, it's hard to see inflation increase. But you simply cannot continue endlessly flooding an economy with money and expect your purchasing power to stay the same. I think at some point you're going to start to see inflation. And I sincerely hope by that point that our economy is recovered, because otherwise the Fed is going to have an absolutely terrible decision to make. Because the way you resolve inflation is to increase interest rates. And the surest way to slow down an economy is to increase interest rates. I don't know what the solution is going to be if we start suffering from inflation and we haven't recovered from this economic crisis. For the next quarter, maybe 2 quarters, record low economic output is expected. Basically, folks, I think there is a very real chance that this will be the worst economic crisis since the Great Depression. You could be looking at an output reduction of 20 to 30% in the second quarter, perhaps more. And really no way to tell what the third and fourth quarter will look like. It's really going to be a function of how quickly we can basically fight the virus and keep further outbreaks from occurring. So where are we headed? I just mentioned sharp increase in unemployment claims. I typed this a couple of days ago, folks. I didn't know what the claims would be today, and here we are. They're much higher than expected, and I expect them to continue climbing. Unpredictable corporate earnings. Now, ordinarily, companies want to give analysts and investors a sense of what their earnings will be like, so they give you a sneak peek. They're not doing that anymore, which is very unusual. So they're not even offering any type of insight as to what those earnings will be. So it's completely unpredictable at this stage. There's no telling what the earnings will look like and how the market will react. We talked about a U-shaped recovery earlier, where I mentioned quick, very sharp downturn at the bottom for a little bit, and then a very prompt recovery. If you take a look at the, you'll like this one. If you take a look at the Nike swoosh, the Nike logo, I think that's what we're looking at. It's my guess, where you have a sharp downturn and then a slow and steady recovery. I find it difficult to think, unless we really, really kill off this virus quickly, if we come up with a miracle treatment or a cure, unless that takes place, I really think it's going to be slow and steady recovery. I think it's going to take some time. And what will really tell is, what's going to make the difference is, let's say hypothetically, we're already seeing numbers decline, and let's say hypothetically that by the end of April, in the New York, New Jersey area, we really start to see the numbers get to much more reasonable levels. The government is not going to simply just open up the economy in full. They're going to do it gradually, probably over May and June, and then wait to see what happens. And if we see future outbreaks, we're going to go right back into isolation. And it's just going to create more and more bumps along the road and stem the chances of a quick recovery. Possibly higher taxes. Let's talk about that in a minute, because it brings us right to the 2020 elections. And I want to emphasize, everybody, when I say the 2020 elections, everybody immediately thinks to the presidential election, which is obviously, a very important one. But I think what happens at the House and Senate levels is every bit as important. There's essentially 3 possible outcomes from the election, which is Democrats control the House, Senate, and the White House. Republicans control the House, Senate, and the White House, or a mix, where one party controls 1 or 2, and the other party controls 1 or 2. Currently, the Democrats control the House, the Republicans control the Senate and the White House. I will be very, very curious to see what ends up happening at all levels, because as you can see, with a rare exception of the CARES Act, usually you create gridlock when you have a mix of parties in various spots. I'd be very curious to see what happens. Right now, the presidential approval rating is off its highs. It's pretty much near 50-50. I think if the election were held today only because people are feeling patriotic during a crisis, I think President Trump would likely get a win. I think whether or not he's elected will simply be a function of how the economy recovers. as I say, be a function of economic performance. I think poor economic performance probably favors the Democrats at this point. You're going to see major changes to campaigning very possibly, right? Because if we're isolating, if we're trying to avoid big crowds, then I think Donald Trump's going to have a heck of a time trying to get 40,000 people in a stadium during a period of isolation. And the same goes for what appears to be candidate Joe Biden at this point. I don't know how they're going to campaign. It's going to be very curious to see how over the summer they decide to do that, or if they're left with online campaigning, or how it's going to work. Because, you know, unless we're prepared to open up the economy in full and have stadiums filled with people, it's going to really, and really kind of cause them to come up with new plans. The future of taxes and our national deficit. This is a whole other conversation, and I promise not to spend too much time, but I will say, if President Biden is elected, if the Democrats hold the House and make gains in the Senate, I think you're almost certainly going to see increases in taxes. You know, we constantly, in both parties have done this, they increase spending. Both parties are equally guilty of that. Neither party has really cut spending of any great substance. Republicans tend to prefer a reduction of taxes, which creates massive deficits, and the deficit is just going to be obscene now that we're putting trillions of dollars to fight this crisis. Eventually, we're going to have to increase taxes, and that will likely include anybody who makes over 6 figures of income, depending on whether you're single or married. It's going to be very hard. They're going to have to increase these taxes in order to pay for everything that we're doing now. It's not the top priority, but there's basically one or two possibilities. If we re-elect Donald Trump, then I don't think you'll see an increase in taxes. You'll just see an absolute explosion of the deficit. But if we elect President Biden, then I think you're going to absolutely get a tax hike at some point along the lines in order to narrow the deficit. So, and because nobody cuts spending, because they refuse to cut the spending. Shifting to just general personal finances, rates are relatively low, so this is a very good time to look at refinancing your mortgage. Given the circumstances, by the way, in lieu of an appraisal, many lenders are just simply waiving those appraisals in accordance with their refi. It's a good time to either obtain or update your will, and I have and I've worked with some excellent estate attorneys, so if you are in need of one, please reach out to me. But a great time to do that now, because we're all stuck in our house, and it's a good thing just to do some paperwork. Review your credit report and credit score. If there are errors, this is a good time to go find them. And you can't really spend a lot of money anyway. You probably already have a television, and you probably already have Netflix, so there's really not a lot else to spend money on. So at this point, accumulate your cash, review your old credit card bills, see what expenses you can reduce, and be in a position that when we come out of this, you have money to spend, you can pay off some debt, and have some fun. Investing, again, I'll just run through these real quick. Avoid trying to time the market, folks. It's an impossible game that's extremely difficult to win. Don't try to guess the market's going to be up in 3 weeks or it'll be down in 3 weeks. It's just too difficult to do. If you have money and you're prepared to invest and you think now is the right time, then figure out the right way to do that and go forward. I do not advocate day trading, and I think timing the market we'll leave that to the hedge funds. Look for value and assess your own risk tolerance. After the markets dropped 30%, there were tremendous value opportunities out there. There's one particular ETF that I like that focuses on high dividend yield, large cap companies. And it has not done well this year. And I love it. I'm buying more of it. I think it's terrific. And I think that's where a lot of money is going to flow this year and next, as people look for value and a little bit more of a stable equity investment. Avoid commission-focused investment products and financial advisors. This is when the time when certain advisors will approach you and say, hey, I can guarantee you a rate of return of 5%. And that sounds great right now, right? Because the market's been plummeting for a bit. First of all, usually those guaranteed rates do not include expenses, and expenses reduce that rate of return. And second of all, those investments are usually very illiquid, meaning you have to wait years and years and years until you can take the money back out. I generally discourage investment products in general, and anybody who's making a commission of any substance you're going to want to question that. Folks have been asking me if they should suspend their retirement plan contributions. That's a personal financial decision. If you can't afford to do it, that's a different ballgame. But if you can, I actually strongly encourage you to make them consistently. This is the time you want to buy, especially if you're nowhere near retirement. If you're 10, 20, 30 years away from retirement, absolutely. Continue. If you have the cash, go ahead and continue putting that money away. These are the three sectors that I think will lead us for the next generation. Technology has taken a hit, but actually has fared much better than most other sectors. Finance has taken a major hit, but I believe that will ultimately come back very, very strong. I think rates are terribly low right now, so near-term earnings aren't going to be terrific. But over the long haul, I love financial stocks. The only thing you have to be careful with is for both finance and healthcare, what you want to be cautious with is potential regulation. Healthcare in particular, and especially if the Democrats are elected. Healthcare companies are a primary target. And I should even point out that even Donald Trump has been very wary of healthcare costs, less so on the pharmaceutical side, but more so on the healthcare side. Look for potential regulation there, so you do want to be cautious with that. But in my opinion, these are the three industries that are going to lead us through any potential recovery. And those are areas that might be worth investigating. That's pretty much what I have to say. And I'm more than happy to open up the floor to questions.
David, thank you so much. Ellen, if you want to unmute yourself as well. I don't have any questions in the Q&A section. Nobody's typed any in. I'm just going to put up the grid view here and perhaps ask people to raise their hand. There's a little button that says raise your hand, and if you have a question, please do so, and I will try to unmute you so you can ask it. In the meantime, just give people, oh yeah. David, did you just raise your hand? Go ahead.
My apologies. I think I inadvertently distributed the email that had my passcode in. So you're seeing tons of David Tepps.
Yeah, and then there's only one real David Tepp.
Yeah, that's what, well, I wanted to make sure I stood out.
All right, so hang on. I see Mary Jo may have a question. So let me just find Mary Jo here. Jenna, if you are seeing the questions pop up, go ahead and, oh, Mary Jo asks, she's concerned about people without a social security number. Can you comment?
I'll answer my portion, David, if you have anything to add. For the loan programs that I told you about, especially SBA programs, those are federal funds loans, and so you must be a citizen or have documents. So anybody who does not have a social security number is not eligible. And I'm talking about they may have an ITIN to pay taxes, but if they're not a citizen or have a green card, then unfortunately these funds are not available.
I don't have much to add other than I believe you do have to be a U.S. citizen to obtain unemployment benefits, and everything I believe Ellen just said is spot on.
Yeah, and I did see Trump at a press conference saying exactly that. So unfortunately, you know, they're not in luck. Mark Shore has a question regarding the PPP program. Will owners not taking W-2 income, i.e. taking distributions, be eligible for the PPP, or will they be part of the loan amount calculation?
I'm going to hedge on this, but it's the owner's compensation. So while it's not a W-2, it is compensation. And they're also, if it's like an LLC, and David, I'll ask you to help me with this, they also are getting the pass-through income from the LLC to their personal tax returns. So that's considered part of their compensation. So that would be part of the calculations.
So yeah, I've gotten this question many, many times. Here's my take on it. I can't, number one, I want to preface, I can't make guarantees. Some of this has happened so quickly, and I can't get a lot of confirmation at this point from lenders because they're so busy, they can't get on the phone. I'm advocating that any sole member LLC owner use their compensation because that is their salary. The business net income is your salary if you are a sole member LLC. And the way that works is that net income is subject to both employer and employee Social Security and Medicare taxes. It's taxed like income, like salary income. So I would absolutely report it, but with the important note that it is capped at $100,000 per annum. So you cannot claim if your business is very successful and you make $300,000, that won't work. You're going to be capped at $100,000.
Right.
Okay, thank you. I have a question from Kim Collins. I am a solo attorney in New York City, and my wife is working out of the home with no employees. Can we apply for unemployment?
Can you repeat that? Can you repeat the question?
So Kim says, I'm a solo attorney in New York City, and my partner is working out of the home with no employees. So can we apply for unemployment?
So they both have their own companies. They're both essentially sole member LLCs.
Yes.
And I think the answer is yes, but I would check with the New York unemployment website and confirm. I think it depends on how long you've been operating independently, and perhaps a variety of other factors. I'm not an unemployment expert, but I would, and certainly not for New York. So I would check, but I would think that you may be entitled as an independent contractor, right? As an LLC owner.
Okay. And I kind of have a follow-up to that, because if you know, what qualifies as unemployment? Because if, for example, you are a sole practitioner and your business has gone, you know, has decreased by 75%, but there's still maybe 25% coming in, you know, do you qualify?
Perhaps, but I think honestly, if you're suffering a temporary income hit, I'm not sure unemployment is going to be perhaps as helpful as the free money PPP grant, right? So if your business, excuse me, if your business is making $100,000 a year, if the grant is accepted, I believe that comes to $8,300 a month times 2.5 comes to about $20,800 for free, as long as you don't fire yourself. Ellen, am I interpreting that correctly?
I'm hedging on that, David. I would say for the sole practitioner, I would say they would probably do the economic injury disaster loan and not use what I should have said is, if you apply for the paycheck protection and the EIDL loan and you have payroll as one of your uses of the funds, you can't do both of them. You have to do one or the other. So I would say in this instance, they should apply for the EIDL loan, which the dollars would go for covering their business rent, their business utilities, their business expenses, and any mortgages. It might not compensate them for payroll, but it'll compensate them for fixed costs for the next few months.
Right, but I'm wondering, so this is my question then. So you're saying a sole member LLC owner is not eligible for the PPP, even though their salary is their net income?
Well, that's paycheck protection is different than the unemployment. I can't answer the unemployment question.
No, it's not. Yeah, no, it's about the PPP. It's about sole member LLCs who work independently, have no payroll. Can they apply for the triple P?
Yes.
Okay, so I guess, but if they can, from my perspective, you know, if you're going to get whatever the number is, $4,000 a month in unemployment, that's taxable, by the way, for a 3-month period, that's $12,000 taxable versus potentially the same amount or even potentially more free if you're granted that PPP money. I believe, I'm not, you know, to be honest, I would recommend you speak with a lender on that, because I'm not 100% sure of the rule. This is all very new, but that would be my position. You know, if I'm an owner, my net income is my salary. I'm not making any net income. then that's what I would aim for at the very least. But maybe an SBA lender who's directly involved in this would have different guidance.
So here's where the 218 tax return is going to come into play, David. They're going to look at what was the, whether they're not distributions, but the capital account, or what passed through to their personal return for 18. And that would be one of the starting calculations.
Right. Right. Well, they would also look at 2019 financials. Exactly right. But yes.
Yes.
That makes sense.
Yes.
Okay, but yeah, David, that's a very good point. You got to weigh case by case what works better for you. There is another question. Somebody has applied for their PPP loan from Wells Fargo and they're waiting for a response. Should they also apply with another bank while they're waiting for a response?
From what I've seen online is that you have to answer a number of questions. And if you say you've applied for somebody else, they'll say, if you cannot apply a second time. So I think you have to wait for that Wells Fargo application to go through the system. Now, if you're declined for whatever reason, it's not necessarily you would decline for SBA guidelines. You could have been declined because of Wells Fargo's own internal guidelines. Then you can go to another lender. But while you have that in the queue with Wells Fargo, you cannot apply again.
I would.
Dumb happened. No phone.
All right, I think that's all. Go ahead, David.
Yeah, sorry. I would further add to that. There is a possibility. I'm not saying this will happen, but I think there's a possibility. One of the questions in the application is, do you have other loans out, as Ellen just asked? And they're asking you for your federal ID number. My concern would be that you negate both applications once it's discovered that you have two separate applications out there with two separate lenders. So I've been asked this question, and I would discourage applying more than once per ID number. Does that, Ellen, you're nodding. Would you generally agree with that?
Yes,
Okay.
I do.
Okay, great. And then I had, oh yeah, it was regarding the health benefits. Ellen, you mentioned that the PPP can also cover any health benefits that you're paying out.
Yes.
Sole practitioner, if you are purchasing your health care on the open market, does that count as an expense?
As long as you can, it shows as an expense on the, on your business tax return on your Schedule C, yes.
Okay.
It's what's verifiable. So what's compensation? Compensation is the money the owner has taken or paid out to employees, and the insurance line item expense on their return.
Got it. I'm going to ask both of you if you would be willing to share your slides with anybody who requests them.
Yes.
Okay, great. So
I'm actually going to prefer not to, but I would encourage those to reach out to me directly, and I'm more than happy to discuss any of the information discussed in my slides.
okay, fair enough. So I know we've kind of gone over time a little bit, but this was all very helpful information. So I'm going to maybe ask you if you have any parting comments to make. And with that, perhaps we'll leave it there, and I will try to send out the recording to everybody who maybe couldn't make it or had planned to make it or had problems logging on. But I do appreciate both of your time, and I wish everybody luck in pursuing their applications and going through the process.
So I would just close by saying thank you again, everyone, for your time. I do come from the banking world, and if I can offer assistance, if I can answer an email, if I can try and decipher any communications you've had from the financial institutions, I'm happy to do that.
Thank you.
I'd like to thank once more Carolyn for organizing this. This was terrific. I really do appreciate it. And thank you all for joining us today. I'll give two more things, a piece of advice. Number one, please stay safe. We just follow the rules for a couple more weeks, and I think we're going to start opening up society again at some point, hopefully in May. And the only other piece of advice I'll give out is never make a decision out of fear. Gather information, gather data, talk to the people around you, speak to your partners, speak to your advisors, and make the best decision you can. this is a terrible event that we're dealing with. It's very tough for folks to really assess. It's threatening our health. It's threatening our livelihoods. Take a deep breath, take a step back, evaluate everything, and make a good decision.
Thank you, David. Thank you both. Good luck, everybody. Email me with any questions that you may have, and I'll put you in touch with Ellen and David. Thank you.
Thanks so much.
Thank you.
Have a good day.